Hey everybody, hope this finds you doing well. This is Networkchain, and today we're going to go into one of the biggest news stories over the past week and talk a bit more about the cryptocurrency market and where it was and where it is going. So, many people look at the crypto market as the wild, wild west, or at least it used to be considered the wild, wild west. And they say that in terms of there wasn't a lot of regulation, there was a ton of risk. Crypto was very volatile and still is to this day, at least currently. And pretty much having the opportunity to self custody, have your own custodial wallets, be able to trade back and forth between peers, it was considered the wild, wild west. It really was. The market spoke. So whatever the market spoke was what it was. And now we're seeing with Bitcoin, the number of institutions and Wall Street now coming into the game, as many people call it. The game has changed. So this isn't anything new to markets. With the stock market, the real estate market, is you have to understand what type of market you're getting into, who are the players in the market, and how you can benefit from being a part of the game. And so that's what we're trying to do here at Network Chain, is learn as much as we can about the cryptocurrency market, learn as much as we can about the players that are in the market, and how can we use this market to be able to store value and hopefully increase the value of what we put into it. So when we look at crypto and when we look at in Bitcoin in particular, the ethos around Bitcoin had to do with not having to rely on a trusted authority and having a peer-to-peer cashless system. And so retail investors like me and you were able to buy Bitcoin, trade Bitcoin amongst one another. And retail investors were large holders of Bitcoin, particularly in the beginning, particularly the first several years where it went from less than a dollar, from basically pennies, to upwards of $20,000 at the height of 2017, into 2017, beginning of 2018. Then we started getting word of institutions that wanted to get into the market and were starting to become more involved in the market, whether it be as custodians and public companies like Coinbase that came onto the scene, Square, which we'll get into in a minute, which came onto the scene, now known as Block. They're a major corporate holder. And if we look at the Bitcoin Treasury data by public companies in terms of their holdings, we of course know of Strategy, which is the largest publicly traded company in Bitcoin holding terms. They hold over 712,000 Bitcoin. Mara, a miner, which is looking to get into AI, and a lot of Bitcoin miners are going to be leveraging their servers towards AI as well. They're the second largest corporate holder of Bitcoin. And then when you go down, you see Coinbase is a large holder. They're also a major custodian for many assets managers and investment firms and institutions who hold Bitcoin. And now we're going to get to Block, which, as you see here, is currently ranked number 15 among holders of publicly traded companies. Now, there are a ton of private companies that also hold Bitcoin. And then, of course, we now know with the introduction of the Bitcoin ETFs, which hit the market in January of 2024, everything has essentially changed in terms of now we're looking at various regulation that has been put on the desks of Congress in the United States. We already have one act that was passed and signed into law with regards to stable coins, and now we're waiting on the Clarity Act, which will give even further clarity when it comes to regulation with regards to cryptocurrency and stable coins. And so with that, we are now seeing all of these institutional players that are coming into Bitcoin. And one of the ways that they have come into Bitcoin is through iBit and the other Bitcoin ETFs. So this is a database just showing from the 13Fs. 13Fs are documents that institutions have to use, particularly investment funds, hedge funds, things of that nature. They have to show their holdings per quarter, and 13Fs are these filings that show what shares they've sold and bought within a particular quarter. So you can see here, and we'll get to Jane Street in a moment, they're the largest holder of the iBit ETF, which is the largest ETF out of the Bitcoin ETFs. They're the largest holder. Morgan Stanley is relevant because they are one of the largest investment firms in the entire world. They have almost 2 trillion or so in assets under management. They've been around since the 1930s and a well-established, well-known investment banking firm, and holds assets and invests assets for some of the top companies in the world and conglomerates in the world. Then you see here Wells Fargo is another major bank in the United States. We have Harvard. We talked about Harvard and their endowment and how much they've invested into Bitcoin, the largest endowment holder of Bitcoin. And you can continue to go down the line, but you can see how many investment firms, how many public companies, how many other major institutions have invested. And this is just the IBIT, which is, once it's BlackRock. BlackRock also is the largest asset manager in the world, basically are the sponsor of this IBIT ETF. And so what happens when you see Wall Street coming into a particular asset, the game really has changed. It's not necessarily the wild, wild west anymore like it was in the early days, the first, 7-8 years of Bitcoin's existence. But now we're seeing that Bitcoin is so-called growing up because of the fact that Wall Street has now entered the chat. Now, a lot of people who were Bitcoiners from the very beginning do not like the fact that Bitcoin is now being taken over by Wall Street. And if you look at this chart here, you can see that the institutional buyers are taking from the retail sellers. You can see that now institutions are starting to get a larger share of the outstanding Bitcoin that is out in circulation. So this is something that we definitely want to keep an eye out for. And as an investor, if you are an investor into Bitcoin, it's something you definitely want to be mindful of. Now, when we know Wall Street is involved, unfortunately, there can be a lot of manipulation, just like there could have been and was a lot of manipulation in the Wild Wild West days. Same thing happens on Wall Street. We've heard time and time again about all the different scams and Ponzi schemes and all the different schemes that lost a lot of people money. We know, of course, of the financial crisis. It had to do with Wall Street, a lot of greed that was happening on Wall Street that caused the financial crisis. The same thing can happen and has happened with crypto. And so Jane Street, as we saw, which was the largest and is the current largest holder of the IBIT ETF, they're a trading firm and market maker. So they use technology through data analysis, and they're able to make trades. And they work in all different markets around the world and are on various exchanges as market makers as well as traders. And they recently were served a lawsuit last week related to Terra Luna and the Terra Luna collapse. And we've talked about this a couple of years ago when it happened, but there was a depegging of UST, which was a stablecoin backed by Bitcoin and by Terra Luna. That started the cascade of 2022 is when we had the bear market. So we're seeing now that Terra Luna is suing Jane Street because of their so-called insider information and the trading activity that happened around the Terra Luna collapse. And as you can see, there was a $40 billion collapse in Terra Luna, and Terraform Labs, which was the foundation and creator of the Terra Luna ecosystem that, as you can see, imploded in 2022. They called this suit and filed this suit in the Southern District of New York, and they're saying that Jane Street had traded on insider information. So you can go to this Forbes article to learn a little bit more about what this lawsuit is about. But there's also other allegations that were not necessarily proven, but in India they actually decided to issue an interim order against Jane Street because they believe that there was market manipulation with the rate that they were trading. And so this can happen when you have these large players who own a lot of assets. They have especially market makers in particular, they have the ability to essentially move the markets. And so India had put them on an interim order which they were not able to trade. And actually, they had a hearing that was adjourned until last week, but then we also hear about this new lawsuit from Terraform. So I believe that has been tabled for the time being. I'm not sure when they're actually going to have the next hearing with regards to being able to get back onto the India's national stock exchange. So also there have been allegations of Jane Street manipulating the price of Bitcoin. So you can see here, this is just a overview of the Terra Luna crash, and there's lots of information that you can find online, particularly on X, but you have to take that with a grain of salt. Obviously, these are just allegations and nothing has been proven. And you have a look here, and this is a pretty well thought out article regarding Jane Street and their practices and implications that they could be a part of market crashes. Obviously, once again, these are all just allegations, but it's just something to be aware of when you're coming into a market and learning about a market and learning about an asset and have an understanding of the players that are part of the game. So we're going to continue to learn more about who's in the game, what the game is, and how, as I mentioned earlier, we can find ways to store value using Bitcoin, which not only is a technological advancement, but something that can be used by AI. So our last news story that we'll get to today relates to Block, and as I mentioned, they are one of the top holders of Bitcoin as a publicly traded company. Their CEO last week also announced they are cutting their staff by approximately 40% from 10,000 people to 6,000 people, and it basically has to do with AI. So if you see here, they said, we're not making this decision because we're in trouble. Our business is strong. Gross profit continues to grow. We continue to serve more and more customers, and profitability is improving. But something has changed. We're already seeing that the intelligence tools we're creating and using, paired with smaller and flatter teams, are enabling a new way of working, which fundamentally changes what it means to build and run a company, and that's accelerating rapidly. So unfortunately, this probably will not be the last publicly traded company that is going to have these type of announcements. We already know of Amazon, UPS, some other major companies that have already, even the Microsofts and Metas of the world, have already announced several layoffs, laying off tens of thousands of people, and this unfortunately will likely continue and snowball over time. Now, AI obviously will create change when it comes to the employment market, but with any new type of technology, that also can bring opportunities and new opportunities. So we definitely want to make sure that we stay on top of what's happening in the market, in the news, and that's very important when it comes to investing, whether it be in Bitcoin or cryptocurrency or any other type of emerging market that you're interested in investing in. You definitely want to do your due diligence before you put your money to work. So once again, we really appreciate you as always for watching. We thank you. We appreciate you. We look forward to linking up with you soon on the network chain. Till the next time, take care. Bye-bye.